Good morning and welcome back. I am Kenny Polcari, your host of the party, and today is Wednesday, December 21st. Yesterday I said it was September 20th. That was my mistake. I apologize. It is December, and we're into the final trading days of the year. So what is it that we need to know that's going to keep everybody on edge? But look, remember, we're into the final 7 trading days, so it's going to get quiet. But moves could still be exaggerated in either direction. Futures are up this morning. Does that mean Santa Claus is coming? I think he is as we move into the year end, but let's see. Oil is up again today. And guess what? China's importing more oil from Russia and India. And I say, really? And OPEC remains proactive. So think about that for a minute. Nike and FedEx beat on earnings and suggest the bottom is not falling out. And what do we have for dinner tonight? We're going to try the escarole and beans, right? Escarole and beans, but we'll get to that in a moment. Housing starts yesterday showed a decline by 0.5%, better than the expected 1.8% decline, right? While building permits just plummeted, falling a whopping 11.2% versus what we expected at -2. An indication that current Fed policy is beginning to work, but it was not enough to cause anyone to think that this one data point was going to change the narrative at all. And as you know, rising rates will continue to hammer stocks and other risk assets until they don't. Adding depth to this narrative was the surprise move by the Bank of Japan, right? The BOJ to raise rates or adjust their yield curve control mechanism that has been in place for years. And this initially sent stocks lower in the pre-market, as analysts suggested that this move marks the end of decades of easy money everywhere you look. The move would allow the 10-year Japanese bond yields to rise by 25 basis points, leaving the upper limit at just 0.5%. The initial reaction in the markets was negative, as it was a surprise. And you know the markets don't like surprises, but in the end, investors appeared to have just shrugged it off. Matt Brill, head of North American fixed income, investment grade income at Invesco, worries that rising overseas yields might steer foreign bond investors elsewhere, saying that the concern is always what will happen if local yields become more competitive than U.S. yields? To which I would say that could become an issue if local yields really became competitive. But with the Japanese 10-year yielding 0.5% and the U.S. 10-year yielding 3.57%, I'm not sure at the moment there's anything to worry about, right? In the end, stocks managed to close slightly higher, with the exception of the transports that continue to get hammered as the recession story suggests that a slowing economy is going to hurt the rails, the truckers, shipping, and air freight. The Dow gained 92 points. The S&P up 4. The Nasdaq gained one little tiny point. The Russell added 9, while the transports, like I said, lost 180 points. Talk of both Nike and FedEx earnings with a buzz in the afternoon. Both reported post the close, and speculation was running rampant about what they would report. What would their results say about the economy? What about the supply chain? What would they meet or beat or miss on the revised lowered estimates on both the top and the bottom lines, right? There was so much to say. And what would it say about the consumer? What would their guidance suggest about the next 6 months? Well, as you might expect, or maybe not, both of them reported, guess what? Better than expected numbers on the bottom line. While FedEx missed slightly on the top line, Nike handily beat both estimates. FedEx was expecting to report $2.80 a share. They reported $3.18, a 13% beat, while total revenues came in at 22.8 versus what they expected was 23.7 billion. In their statement, they cited weakness in their FedEx Express and said that they would cut an additional $1 billion out of the budget, bringing their total cost reduction to nearly $4 billion. Year-end earnings are now estimated to be between $13 and $14 versus the expected $14 a share, $14.14 a share. The stock is quoted up $6 this morning after being down $4 yesterday. And year to date, just so you know, it's off 38%. So there might be an opportunity. Nike reported 85 cents versus 64 cents. Revenue of 13.3 versus 12.5 billion. And they raised the year-end estimate as they celebrated their success at clearing out all that inventory. Global sales rose by 17%, and the C-suite said that year-end performance was strong. Nike is down 38% year to date, so traders saw this as an opportunity to scoop some up, and they took it up 10% in the after-hours trading. This morning, the stock is quoted up $13 at $116 a share. So in any case, they were not a disaster. Hardly. So let's see how the rest of the season goes once it officially begins on January 13th when the banks kick it off. JP Morgan in the lead. Remember, analysts are busy cutting, revising, slashing estimates. So I expect that we're going to see the same 75% of reports beat on the top and bottom lines. But again, it's going to really be all about what they say about the coming 6 months, right? Remember, Mikey Wilson of Morgan Stanley thinks that 2023 S&P earnings of $220 a share are much too high. He's looking for them to be revised much lower, in fact, 22% lower, which takes us to $180 a share. I think that's way, way, way overdone. Thus, his lowered revised S&P target, right? He's calling for S&P 3000 before this is over. This morning, U.S. futures are up. Maybe that means that Santa is coming to town. Dow futures up 270, S&P's up 25, the NASDAQ ahead by 65, and the Russell is adding 12. The feel-good move being fueled by Nike and FedEx numbers and the fact that there appears to be a tremendous amount of resiliency in the face of what many expect to be a difficult time in the markets for the first half of 2023. Eco data today includes the latest read on mortgage apps and existing home sales, which are expected to be down by 5.2%. As discussed, we are in the final days of 2022, and investors are paying less and less attention to the eco data because they're concentrating more on the holidays and their families and all that. Much of it is expected to be weak. Okay, so unless it's considerably weaker than expected, I don't see how it changes anyone's mind at this point, right, on what happens in the next 7 days. We could still get that Santa Claus rally into next week, but don't expect much more than S&P 4000, which would represent a 4% rally from last night's close, right? I think that's the best we get. In the end, even if we get any kind of Santa rally into year end, don't expect it to last into the new year. As I've also been saying, I expect the first quarter, at least January to March of 23, to continue to be volatile as we digest the coming macro data, which, as we know, is expected to be weak. And we assess the damage that the recent rate hikes have created. If Santa does come, S&P 4000, like I said, is 4.5% higher from here. Oil on the move. West Texas up 70 cents at $77 a barrel. China importing from Russia and Iraq, right? More oil than they could think of, which tells you what? Hello, can you say demand? In addition, the boys at OPEC continue to rattle the cages, suggesting that they remain proactive and will adjust production based on what they perceive supply and demand to be, which makes sense, which just means they stand ready to cut production if the price of oil approaches $70. Remember, 80 is their base case. 90 is even better. 70 doesn't work for them. Gold rocketed higher yesterday, breaching the resistance level that we spoke about days ago. It ended the day at $18.25 an ounce, up $30 or 1.7%. This now sets us up to challenge what I've been saying all along is $1,900 an ounce before we hit any significant resistance. European markets are all higher this morning too, up by nearly 1% in early trading. No reason really, just a bounce from what appears to be the short-term oversold position after investors there digest all the latest central bank commentary. The S&P closed the day at 38.21, and this morning with futures higher, we can expect a bit of a bounce. Maybe Santa is coming after all. Remember, all you have to do is you have to have a plan. You got to stick to the plan, stick to your goals, take advantage of dollar cost averaging in your long-term account over time, because that's how you're going to win and that's how you're going to beat the market, right? Okay, so what do we have for dinner tonight? So this is called escarole and beans, but if you're in an Italian household, you just call it scarola and beans, because escarole, you'd call it, we call it scarola, right? It's kind of a slang term, but this is served with orecchietti, those little ear pastas, with escarole and beans, right? So it's a great, simple dish. It's easy to make. It's good to eat, especially in the wintertime, because it makes you feel all warm and cozy on the inside. And you got to have always, as usual, plenty of fresh grated Parmigiano cheese on hand to use at the end, right, when you serve it. Now, depending on where you are from in Italy, southern Italy, Sicily, the Mediterranean side, or the Adriatic side, is going to determine how you make this dish. But for me, of Neapolitan and Sicilian descent, simple is always better. So for this, you need 1 pound of the orecchietti pasta. You could use another small pasta. You could use elbows if you wanted. You need garlic, olive oil, diced Vidalia onions. You need the escarole. You need chicken broth. Homemade is always better. You need cannelloni, beans, salt, and pepper, and plenty of fresh grated Parmigiano cheese. You want to, as usual, get a pot of salted water, bring it to a boil on the back burner so that it's ready when you need it. Now, get a big saute pan. Begin by sauteing the crushed garlic in some olive oil. Add in the diced onion. Saute until it's nice and soft. You know the drill. Don't burn it. 8 to 10 minutes. Get it nice and translucent. Keep the heat at medium and continue to stir it, right? You want to saute it, like I said, 10 minutes. Now you're going to add in the escarole, right? So you're going to chop up the escarole. Leave it chopped, right? Don't dice it. Leave it chopped. Add it to the pan, saute it quickly. Season it with salt and pepper. Now you're going to add the chicken broth. Remember, you're not making soup, so don't overdo it with the broth. But put enough in there so that you got a little bit of a sauce, right? Now you're going to take the cannelloni beans, open them up, drop those in. The juice and all right from the can, just drop it in. Simmer it for 15 minutes to make sure that the beans get all nice and warmed up, right? Ready for the pasta. Turn the heat off, add a handful of cheese, mix it well. Now you're going to put the pasta in the pot. You're going to cook it for about 8 minutes because remember, it's going to cook a little bit more when you put it in with the escarole. You want to leave it just al dente. You want to strain it. Always reserve a cup full of the pasta water. You know that. Now add the pasta directly to the beans and the escarole in the saute pan. Mix it well. Throw another handful of grated cheese on it and then mix it again. You want to serve this in warm, then you're done. You want to serve this in warm bowls. Always having extra cheese on the table for your family, right? It's the perfect winter meal, especially if you're up in the Northeast. But down here in Florida, we're actually going to get a little cold spell. So it's only going to be 60 degrees versus the usual balmy 75, 80 at this time of year. So, in fact, I might make this tonight for dinner as well. Until tomorrow, take good care.